Greetings and welcome to this week's edition of Trade Theory on Tuesday, April 28, 2026. This is the dollar index here at a daily supply level back from the 21st of 98.68. So price has it went up to that demand level that was set from the all-time highs or the highs on the dollar for this year and blew through there and starting to decelerate. So we're entering a sell order at 98.56 here on the dollar. And I've got two stopping points, and I'll get to that in a second. So we've got the dollar that we're short at 98.56 right now. Price is currently at 98.60, so it's a little bit out of the money. And so what we're going to do is we have a mathematical stop out, which is more of a mechanical, more of a calculated stop out, and then we have a visual stop out based on where I would really want to protect this trade from the account. But I'm going to go with a mathematical stop out because the numbers are telling me what's possible. So we're selling the dollar here at 98.56. We have a stop out point of $100.56, and then we have a mathematical take profit of 96.56 down here, just below the daily demand level. But the way the price has been acting lately, I think once price gets down to this demand level, we'll probably get that extra 20 cents before a bounce. But nevertheless, trust me, if price gets down to 96.76, at a minimum, we will protect our profits by adjusting our stop loss. And at a maximum, we can just manually close out of the trade. Okay, so that's our sell on the USD for this week and probably for the next several days, honestly. All right, so we're going to move on to the 10-year Treasury yields here and see what we've got. Yields are starting to rise, which means demand is starting to wane, which makes sense because once I show you the indices, well, basically what the markets have been doing over the last week or two, you've seen that continued upward movement in momentum, which obviously people are leaving safer assets or perceived safer assets like treasuries and probably deploying more capital to the market. So we have the change of sentiment here, which means that demand should be waning. Wouldn't be surprised if those yields started being approached again. The 4.32 yield may have been approached one more time, but this is showing a decrease in demand on 10-year treasuries, and that's pretty much all I've got there. All right, moving on to Tesla. I think I put a hypothesis on for Tesla as well. And so, yeah, we have a buy entry at 376.89 based off of this price action that we see here. Price is right now 376.09, so we're about 80 cents out of the money. Let me zoom this up here so we can see. There we go. So we've got a stop out point of 305.17 and a take profit target of 441.13. So we're buying at 376.89, looking for price to extend up to 441.13 in the coming weeks. Okay, looking at Nvidia, and this is one that I did not put a hypothesis on. It is moving quite nicely to the upside. This was the upside area of interest. Once price got here, I'd expected price would give some type of reaction and continue, and it just pretty much continues straight away up here to all-time highs, or at least, yeah, all-time highs at least over the last year. And so now I'm looking for at some point a retreat to add to a position if you're long on Nvidia. All right, moving out to Bitcoin, which Bitcoin has been dropping a little bit and probably shaking out some people. But what we've got here, as I mentioned back on the 21st of April, we've got a max supply level of 85,635.36. And so I think this is just a breather. So we'll put a daily demand level of 74,737 here. I'm sorry, that's on the 7th. Oh, that's supposed to be the 27th. For whatever reason, I didn't check. Let me change that now so we can have that as we got to make sure that this stuff is dated properly so that you can know when things happen. So we've got a daily demand here level here of 74,737. And my expectation is that price will continue to rise and try to test this 85,635 level. And then we'll may see the depression and the capitulation of that, may be a continuation shorter. So just be mindful that although Bitcoin is falling today, I wouldn't be totally averse to potentially exploring a buy once price gets down to 74,737. I may revisit that by the turn of next week, but right now I'm looking for this depression to be part of a move higher for Bitcoin. All right, moving on to gold. Gold has started to decelerate, as we discussed. We had an upside target level of 5,044.86 on the 24th of March. That price is starting to have a hard time accomplishing. And gold is similar in respects of at least perceived safety. It's similar to the treasuries. And so this makes sense that there's a kind of a deceleration in gold prices right now. So we're going to go ahead and create a sell at our area of interest that we had on the 21st of 4,676.75. So we'll sell there. Should price come back to that point, so we'd have a limit order here. Our stop out is 51.7325, so above our supply level, and our take profit is at 41.8025. So should price hit and trigger the 46.76 over the next day or so, we'd be in for a sell on gold with a target of 41.8025. Okay, now looking at the indices, which they've moved significantly, so there's a little uncertainty about what to do next. Here, I would expect in this area of interest from the 21st, which is 49.123.02, probably price will probably try to continue higher one more time up here, but you never know. So I'd wait for a depression. I still have this reset zone here of 47.961.81. That's a much safer, quote unquote, place to actually add to this position. So if you were already long back from the supply level here on the 31st of March, you've captured all this gain, and all you have to do is wait for price to depress a little bit and add to your position if you got in down here. Okay, looking at the NASDAQ, prices moved to significant highs here as well. And I want to go back in history a little bit because we're always looking forward, but sometimes it's good to take a look back into the past. So on the 6th of August of 2025, I had roughly 26,386.40 as the max extension point for the NASDAQ. And so you see it hit that here on April 16th of this year. So about 2 weeks ago, price hit that max extension point and broke through there to our take profit that we had set for the 10th of February that we had a long on a 27,023.1. So it hit our take profit, and I'm looking for price to depress back somewhere between where it is now and this upside area of interest that we have, 26,187.40. Okay, so I'm not doing anything with this until price depresses a little bit, and then we maybe look to add to this position. And this is similar to the US 30, where if you caught this off of the supply level here when it broke and closed above there, you caught all that upside, and so you want for a depression to get in at a higher quality entry here, roughly to 26,187.40. It may be a little higher than that, but somewhere around there. Okay, and then wrapping up with the S&P 500 real quick. Prices hit all-time highs, and I want to do a little history lesson here as well. I believe I have some. There we go. We have not hit our max extension point. Let me zoom down because I think I've got a target point. There we go. So our max extension point from the 6th of August of 25 is 72.48.29. So that'd be our first breakthrough area with a target take profit of 73.98.81 that was set on the 10th of February 26. So expecting a depression first, gathering up some steam and fuel, and then a possible push higher as well on the S&P. So the indices are moving higher, but we want to wait for a depression before we add to those positions. All right, I hope this is beneficial to you. Be on the lookout for the Vantage Point Macro Newsletter coming out soon. And until next time, enjoy the day. Happy trading.